Hi everyone, and welcome to another episode of cryptocurrency news. In this episode, I will speak about my thoughts, what has been going on with the market since the previous episode, and then I'll just go through my tweets and expand on some thoughts which I have shared. And please like, comment, and subscribe. Please have a look at the links below. There are some good discounts and some free money. So the most interesting thing that has happened in the past week, which is related to Bitcoin, was a rather significant sell-off of the stocks. And here we can see the sell-off at the S&P 500 and rather small dump in BTC. Now gold actually experienced a sell-off as well. It's not a massive dip in the stock market yet. It's not a definite recession. It's not a massive cascade yet. It could become that, but it is likely that governments will respond with some more money printing, and they will try to rescue the stock market from plunging further. And obviously these things are bullish for gold and for Bitcoin. So a lot of people were expecting for BTC to actually go up when the stocks went down, but both BTC and gold went down, and that was an interesting price move. What's also interesting is that BTC didn't go down too much. It just went down a bit, while the losses in the stock markets were quite significant. So that was probably the most important event. The BTC has dumped a little bit, but we are still in a decent contango. The prices of the futures contracts are high. The funding is, let's call it moderate. And essentially not much else has been going on in the crypto markets. So let's go through some tweets. So we have finished here on the last episode. An interesting news on ETH kind of community consensus. It turns out that the POW, so it's the programmable proof of work, is not an idea without controversies. There are a lot of people opposing programmable proof of work, and it has been agreed that it will be deployed, and then it sparked a lot of dissatisfaction among some ETH community. So this upgrade, or we can call it a fork, can be a little bit contentious. I think it's unlikely that ETH will split from that, but it just shows a difference between ETH and BTC. How BTC is kind of stable, the protocol is really ossified, while in ETH there are some upgrades, there are some new ideas, and some people, some ideas are quite obvious and predictable. But this has not been predictable for a large part of the community. Here are my thoughts about the FTX exchange. I recommend you have a look at this video. I talk about how much of a success Alameda Research has got, and Alameda Research has nothing to do, well, maybe just a little bit with the crypto market research, but they are just a prop shop. They have been hiding for years, not revealing themselves to the public, but they have now gone public, and there is an interesting, a large amount of intellectual property, which is very interesting, which is being shared by SBF and Alameda, and I think it's a very interesting participant in the crypto markets. And I also mentioned about the bull and bear tokens. So these tokens are increasingly popular. They are now traded on Binance, and these tokens, they are not linear instruments. They have a lot of properties of options. They are kind of a mixture of an option and and a long contract, and it's really expensive to hold these contracts. So if you were long ETH, because ETH went up in a straight line over the past month or so, it was extremely profitable to hold ETH and then sell at the top, but it's also very difficult to buy and sell at the top. Overall, with normal market fluctuations, it's really expensive to hold these tokens, and over time, I would be keen to short these tokens and then just reposition. It's not just that there is a component, a non-linear component, a component of an option in this contract, but also these contracts execute market buys and market sells every day, and you need to pay the taker fee every day. Here is my comment about gold going up a lot. So it went to $1,700, which is a very high price for gold. Gold hasn't seen these prices over the past several years. Now this is a thought experiment. So if the options open interest is really massive, it's 1 billion worth of Bitcoin. Now imagine if someone has bought Bitcoin on the spot order books and just wiped out all the spot orders. Then if he did that in a short period of time, then a lot of options sellers would be forced to hedge their positions, because this is what they do. Like, selling options is a complicated endeavor, and you need to make sure you're hedged. And once the price goes up, they have to buy. When the price goes down, they have to sell, and they are rewarded with the theta decay of the options for doing that. So they need to have enough theta decay for the buying high, selling low to stay profitable. If there is a large move up, then it can be very unprofitable for the option sellers. So in this thought experiment, if someone just pumps the BTC to 20k, these option sellers would have to buy 1 billion of Bitcoin to just stay market neutral, because it can go to 30k afterwards. And the problem is that there isn't 1 billion BTC to buy on the spot markets, so they would have to go long derivatives, and there would be a massive premium already on the derivatives. So they wouldn't have too many venues to hedge, and they would be just forced to buy at massive premiums. That's just a set of interesting pictures of tons of margin calls and liquidation notices. There are a lot of people who do get liquidated and pay large fees for having that. That's an interesting event on Bcash chain. So a miner has just swept 9,000 BCH, which are now trading around $400, which were mistakenly sent to a SegWit address, which is not a valid Bcash address. Now, Bitcoin is really great for countries where you don't have access to a dollar, you don't have access to a stable currency. So, Bitcoin will overtake, will get a very significant role as a solid collateral, not instantly, not immediately, but slowly and steadily over time, when people who cannot get their funds out of a country, but people who are forced to have their savings debased start looking for an alternative. And when the US dollar is not available, BTC is there. So here, Coincident Capital just says that, initially they thought that crypto would go up, but then they were slightly wrong. It actually went down. but there still could be a rally when you compare the stocks crash or dip to the BTC dip. The BTC dip is not as significant as we are used to. Like 20% dip is nothing unusual for BTC, and that dip was only 10%. Some interesting, I believe this is a Bloomberg terminal printout. Hong Kong is an interesting area to me. Like in my view, Hong Kong has been a great place to trade and do business, but it will cease to exist at some point, maybe in a few decades. And there are some really high valuations. The banks are highly over leveraged. The properties are extremely high. And in my view, Hong Kong will collapse, and the Hong Kong dollar will not be able to hold a peg to the currency. Probably the trader most interested in Hong Kong collapsing would be Kyle Bass, and he continuously just posts tweets about how Hong Kong is bad because he has invested a lot. Well, he has shorted Hong Kong quite a lot. That's that dump. So it's a huge amount of liquidations and sales, but it resulted only in a 10% dip. So there is still demand for buying BTC. This is just me mentioning my arbitrage account on Bitmex testnet. At the moment it's up 770% so far, so it's doing quite well. It's an interesting endeavor, because the scenarios that you see there are very real. They do occur in normal markets. They're just rare, while they're abundant on the testnet. This is just a hilarious meme of the a remnant of the ICO bubble, how the same person is pretending to be developer, lead marketer, and lead designer. The interest yields are continuing to go down, and it's not just US, it's everywhere in the world. So governments are printing more money, taking the interest rates down, and that's obviously very bullish for BTC. That's how how chilled you can be about the stock market crash when you own BTC and crypto. Like these two markets are slightly correlated, but not completely correlated, so that there can be a massive crash on the equities, while crypto can just either go up or stay flat, or it can go down as well. Like it's very difficult to figure out how Bitcoin will behave in relation to the stock market. Some institutional ways of trading on Deribit, like trading through Paradigm, are seeing all-time highs, and that's very bullish. A lot of these institutional investors are making bets which always win, so they just deploy some capital, and over time they will be making a significantly more amount of money, a significantly higher amount of money than they would make in a savings account. So in a savings account, maybe they could get like 2-3%, while on cash and carry in BTC you can make like 20% yearly gains. So that's something that lures investors into the crypto space. And once they figure out that this is real, that the gains are real, that the coins are real, that the collateral that Bitcoin is very real, they might be interested in buying some. And obviously, when they buy such an asset which can go down 50% in a matter of a week, their expectations of profits are not 10% up; they're way higher. Here, three CEOs of 3 large companies are stepping down in the same day. Very interesting. Travis Kling just reinforcing their thought that central banks have zero choice other than to print money and cut rates, and that's very good for crypto. This is the funny tweet of Donald Trump. So he has tweeted at the very top that we have highest stock market in history by far. The next candle is going down a lot. It's around 10%. A funny fact that 8% of US population and 33% of African American male population in the USA cannot pass compliance at most crypto exchanges and some other instruments, and that's because of the previous criminal history. So that's very interesting. So we currently have plenty of people doing cash and carry, and they are long spot, short futures. Now, a lot of these futures will expire in March because March had massive premium, and their plan is to sell spot. Well, most likely their plan will be to sell spot when the March futures expire. So I would expect the price of BTC just go down slightly at around the time of expiry, but some will just roll out their positions and they will just sell futures for the June ones if they are at premium. However, if the March futures go down before the expiry, then we could see a lot of these cash and carry arbitrageurs closing their positions, and they would be buying. So they would be closing their shorts on March futures with the future in backwardation. So it would be more profitable to them than closing their trade at the expiry at spot price. And to close the second leg of their hedge, they would be selling spot. And that would be the reason why the spot price would go down. An interesting thought about the FTX. They trade mainly in USD denomination. So when you buy or sell something, you usually buy it for USD. So you can buy some contracts for USD, and your collateral is BTC. And effectively, FTX allows you to buy some contracts for 30 grand, buy or sell. So effectively, you buy something worth of 30 grand, posting collateral in BTC. So effectively, you are borrowing $30,000, and they are not charging you any interest for that. So that's interesting, because the market value of borrowing dollars is around 0.03 to 0.3% a day. So that's quite profitable. If you go above 30 grand, it's 0.1% daily, which is rather on the expensive side. But under 30 grand, it's a bargain. And in the most recent tweet, I just say that a lot of people in crypto Twitter, they are just looking for people who keep saying that they have made fortunes, and they just want to copy their longs and their shorts. They think that because these people brag about being right always, they think that this is true, and that by following them, they will be able to copy their success. The problem is that quite often there is no success, that these people brag about these massive gains, but there are no real gains. And copying someone else's longs and shorts could be as effective as just randomly flipping a coin. The truth is that if you want to look at the proper trading, then you need to look at entities like Alameda Research, like some other quant trading firm. This one was Volkswagen, which had an investment from Alameda Research. So this is where the true profitable trading is happening. It's not just some random guy on Twitter who claims that he makes a lot of money. So that's it for this week's news, and I'll come back in the next episode. Please like, comment, and subscribe. Please have a look at the links below. Thanks for watching.